Hi traders, Barry Burns here with Top Dog Trading, and today, Japanese candlestick charting techniques part 2. So in the last video, and I'll put the link to the last video in the description below, by the way, and you can go see that, or just type in Top Dog Trading, Japanese candlestick charting techniques, and I'm sure it'll come up. But go ahead and watch this one first if you are seeing this one first. But in the last one, we looked at a particular type of candlestick pattern that I love, and it has the logic of a rejection of value behind it. And we looked at it in a trend. So, in fact, here it is. I'll just show you right here. If we go over here, give you a quick little review or preview. So right there, that's what it is. It is a real body, open and closed near the high of the bar, and then a long wick toward the bottom. And what that literally means is, if we take that all the way over here, look at these prices, that means the action was rejected. These price levels were rejected, in other words, going down low, and a lot of demand came in during this time, and so the lower prices were rejected. In other words, people wanting to sell. Nope, the buyers came in, and it opened and closed near the high. And in an uptrend especially, and got to reiterate this, you cannot just trade this one candlestick pattern in isolation. It must be taken in the context of the chart. This is a first retrace in the trend, so we are very early in a new trend. We've got wave 1, wave 2, so that's your first retrace in the trend. So we got early in a new uptrend. We've got a cycle low. That's my cycle indicator. And then, it's a great spot to find the move to the upside, a good way to find retracements in a trend. Don't like to really trade breakouts, because if I trade the breakouts, say, of this high over here, you're just getting a much worse price. Or even here, this would be a little bit better. But you're paying retail when you come in at these levels. I like to buy wholesale, and that's how I do it. So I use my cycle indicator, which I'll show you how to get that. And then this pattern here is just golden. Okay, so again, the market logic is very, very important. Whatever you're trading, whether it's a moving average, candlestick patterns, indicators, there all should be a market logic behind it as to why it works. And market logic means, what are the market participants doing with regard to buying and selling that creates that pattern on your chart, that graphical pattern. All right, so that was with the trend. Now I'm going to show you how to do it against the trend. Against the trend, there's a little difference. So here we got the candlestick. All right, and this is why, again, you do not trade this alone. So we've got a really nice rejection of value candlestick bar right there. I mean, wide range bar from high to low. That was one of the qualifications we talked about. Open and close near the high. That's the other one. And a long wick on the bottom. So the real body should be at the top, 25 or 30% at the most. Long wick, we got it. And that means, again, okay, we're in a downtrend though. So when the big picture is to the downtrend, so there's different scales. Trend is a big scale meta pattern type of indication. Candlestick bars do not create trends necessarily. They're not about trend. They're very short-term signals. So you have different indications of different scales. So a trend is a long-term indication. Candlestick bars, very short-term. I actually had someone ask, well, how long does the trend continue after you get one of these candlestick patterns? And the answer is, this type of candlestick pattern does not create a trend. You look for it early in a trend for a retracement, or late in a trend for a reversal. But it's not in and of itself, it tells you nothing about trend. So it's more of a scalpel in your toolbox, and it's not a broad stroke tool. Moving averages are broad stroke tools. The longer the average, the more broad stroke they are. All right, so this is more your scalpel, but we're not going to take it because it's against the trend. And it's not very late in the trend. Right, so, but I notice it. What I do is I'll take note of that, and I'll say, still, during this period of time, this one bar, whatever period of time that is, daily, 60 minute, 1 minute, and it will have more significance the longer term the chart is. So daily charts, I would say, would have more significance. But these days, the market can do anything at any time. Okay, we come up. Now, here's what I'm going to look for. There we go. I want to see this puppy retested. And because we're early in a trend, or in downtrend, I don't want to trade against the trend yet. I will only trade against the trend late in a trend. And that goes back to the slogan you probably heard, the trend is your friend until the end. So if I'm going to take a counter trend trade, I'm going to do it near the end. And that means as long in that trend as I can get it. The longer the better, because the longer that trend continues, the more likely it is to not continue. And then I'm looking for signals for reversals. Again, trend reversals, trend by itself is not alone enough to trade with either. So we've got to look for other things. Now that we're late in a trend, okay, let's see what kind of signals we get to the upside. All right, so now what we have is several things. So we've got a rejection of value here, and then the market has, by the way, come to this support level and rejected that support level, went up a bit, came back down. That support level continues to here. When we get back to it, again, rejection of value. So we've had a rejection of value once, we've had it twice, okay, and now the trend has lasted longer. And this, by the way, is called the top dog trading rule of 3. When it come and hit a support level and it doesn't go through 3 times, then it's not likely to go through in the intermediate future. Again, each one of these things is one piece of evidence. Don't trade the top dog trading rule of 3 in isolation. It's one more piece of evidence that we add. So the pieces of evidence are late in a trend, rejection of value candlesticks, coming down to support 3 times, and we also have one more, and that is momentum shift. So I've got my momentum indicator on here, and this is first cycle low after momentum comes back up. And that put all those pieces of evidence together, almost like creating a legal case, and then I take a trade. I don't trust any one thing, any one candlestick pattern, any one moving average, any one indicator, no one, nothing. So my system is called the Top Dog Trading 5 Energy Methodology. And the 5 energies refer to energies of money or money flow. Or if you want to really break it down, simply supply-demand imbalance. And we are using mathematical tools. Remember, indicators are math tools. And we're using price patterns, price action. And we're using multi-bar patterns, putting all these things together. And so, again, putting together a legal case, we're looking for 5 pieces of uncorrelated energies to put a probability scenario in our hands, and then we take the trade. And if you want to learn more about that, I've got my, I used to do this live, but I recorded the webinar, and I briefly go through the 5 energies, and then I focus on the cycle indicator and show you how to set that up in your charts. And the cycle indicator is my scalpel tool as well. I use that in conjunction with the candlestick patterns for even more accuracy to pinpoint my entries to the penny, to the pip, to the tick, and my protective stops. So you can just go over to indicatorwebinar.com, and it's there for you for free.